Welcome to FYI, the For-Your Innovation podcast. This show offers an intellectual discussion on technologically enabled disruption, because investing in innovation starts with understanding it. To learn more, visit arc-invest.com.
ARK Invest is a registered investment advisor focused on investing in disruptive innovation. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. It does not constitute, either explicitly or implicitly, any provision of services or products by ARK. All statements made regarding companies or securities are strictly beliefs and points of view held by ARK or podcast guests and are not endorsements or recommendations by ARK to buy, sell, or hold any security. Clients of ARK Investment Management may maintain positions in the securities discussed in this podcast.
Greetings, everyone, and welcome to FYI, For Your Innovation. Well, today I'm privileged to be hosting. Normally Brett does, but this is a special day. I have Dr. Arthur Laffer, who actually was and still in many ways is my mentor, has been an advisor at ARK since the founding of the firm, has become a dear friend over many, many years, and has been rejuvenated, I think, this is what I observe, by the crypto movement. And we first started talking about it in 2014 and 15, and we'll get into that in a moment. But thrilled. And oh, by the way, Dr. Arthur Laffer gave me my big break in the business, introducing me to Capital Group in 1977 when I was a junior at USC. So thank you, Dr. Arthur Laffer. And then Marco Santori. We've been introduced recently, but Marco comes from the legal world, and I found that very interesting as I was learning about his background at Kraken. I believe there for 5 years as chief legal officer, and then a quick stint as GP at Pantera, where I believe you launched the first Solana DAT. Am I right on that?
Yeah, it was actually before Pantera. It was the first deal I brought to Pantera as a general partner. It was the DeFi Development Corporation. Yeah.
I see. Okay. So, and then you found out about Solmate, this opportunity, a Solana DAT, but we'll get into DAT and what that is and is not, and what Solmate is and is not in a moment. So I guess I will now start the questioning. All right. So I'd love to, before we get to crypto more generally, from a legal point of view, you've seen the industry evolve, and I'd love to get your take on, where it's been. We know we had some very difficult times from a regulatory point of view. We think we're through that now, but just would love to learn how you believe the crypto world is opening up under this new administration and what the possibilities are.
Yeah, that's really the right framing. I mean, the new administration in the United States has flipped the script on crypto. The 4 years prior to this administration was probably best described as a game of political football, where crypto was the ball and it was just getting thrown around and kicked around for reasons having nothing to do with consumer protection or investor protection. And one of the real key positions of the new administration was to end that. And I think President Trump and the whole administration has done a fantastic job, really turned that all on its head. I mean, what we're doing now as an industry more broadly, and certainly what we're doing at Solmate, never could have been the case. It never could have occurred, never could have happened. There would have been no possible path for investment and success under the prior administration. It's really opened up a playing field. Mm-hmm. Absolutely.
Mm-hmm. So, we were about to lose this innovation to the rest of the world, and it is now coming back to us in full force. I'm sensing.
Yeah, I absolutely. When you speak with regulators and you tell them that they should be concerned that innovation is going to flee overseas, they usually tune out. That's not their job. That's the job of the political process, is to drive new innovation and to attract new innovation into a particular jurisdiction. But that's exactly what happened because of both the political process and the regulatory process over the last 4 years, because the regulatory process had become so politicized. And as a lawyer, I was outside counsel to a number of companies. I was inside counsel to a number of companies. I saw that happen firsthand. I saw so much of American innovation and potential American innovation get drained out to the periphery of the world, not even the large financial centers, just places where they could innovate in peace and create in peace and build new structures in peace. It was depressing. I mean, you could see it. You could see it reflected in the price of the assets. You could see it reflected in the kind of opportunity that new employees and innovators had. And I think it set us back dramatically. And what happened last November, I should say a year behind November, really changed it all.
Yeah, and we'll get to this later, but Solmate is doing a lot in the Middle East, perhaps because the Middle East was awakened during this period. This was an opportunity to leapfrog the United States.
It's a really good point, right? Like, would the Middle East, in the UAE in particular, be such a hotbed of opportunity had the U.S. not seeded that?
Mm-hmm. Mm-hmm. And inspired the leadership there to run because they weren't going to have this competitor, at their throats. Okay, so Art, so we have been on this crypto journey together since 2015. Maybe you can talk a little bit about the aha moment for you, and then we can continue along.
Sure. I'm just going to be a short part of this podcast, a very small part. I'm on the board of Solmate, which I love you. Thank you very much, Marco. And Cathie, our relationship has been great since you were my student back at USC. It's just fantastic. Yeah, in 2014, when you approached me with this and the white paper done by one of your people there, it was something I've been looking for a long time. If you watch what happened, we were private currencies before 1913. We had no inflation since 1776 to 1913. We had no major depressions. We had long-term rates stably falling from about 5.5% to maybe 4.5%. Perfectly wonderful long-term capital markets going on. And then from 1913 with the Fed, and then with the confiscation of gold from Americans in 1933, and going on up through the Smithsonian, which I was in the White House back then. Government nationalized all the currencies. And then by 1972, I think it was, we were completely on unhinged paper currency. And we had average inflation from 1913 to the present the prices rose about 33-fold. It was just a crappy federal government monopolized product that needed something else. What I saw in crypto was the private markets innovations to take over the functions of unfounded government money and how underperformed. And so I was ecstatic about it then. And it was Bitcoin that we talked about then a lot.
Yes.
But I needed Bitcoin to change from being an asset with a fixed quantity and a variable price. I needed also to have alternatives in there, which were uncontrolled quantities, but at a fixed price. And those are the stable coins right now. We have Solmate, which I love dearly. I mean, really fun. And it's been a beautiful innovation of the private sector trying to earn back and get back the control over money. And it's very exciting because the monetary policy of the last century and 25 years has been so outlandishly bad that it's really stifled growth and prosperity and innovation in this world. And what you guys have done is just amazing, and I love to be a part of it. 85 years old, and I'm just so excited about the future on monetary policy. That's where I come from.
And I'm going to give a plug for a paper. We collaborated with you on a stable coin paper focused on the interview we did with Paolo at Tether. But this putting into context what you just said, people don't understand that in the era of private money, we had, on balance, no inflation, zero.
Exactly.
Since the Fed came into existence, 1913, prices have gone up 33-fold. I want to put an exclamation point on that.
I mean, that's just enormous. And no depressions.
Right.
No depressions prior to, we had financial crises.
Yes.
But that's very different than a depression.
Financial panics. Yes, we had financial panics,
short-term crises where assets change ownership, but nothing stopped the real production process of the economy.
And now what do we have still? We have the Fed controlling the behavior of so many markets, clinging to everything every board governor says. So anyway, we've got now real competition from Bitcoin and other cryptocurrencies.
Sure it is.
Yes.
You guys have been thinking about this for a long, long time. And there's now this whole new generation, and I actually count myself among them, of people who really didn't think about these issues until Bitcoin came along. And it's been said that Bitcoin is a tool for freedom from tyrants and oligarchs wrapped up in a get-rich-quick scheme. It's amazing. Like, I follow my own journey of how I got into Bitcoin. And that was the case for me. I said, oh my gosh, people are making a lot of money out of this. I should learn more about it. Maybe months later, I was zeroed in, dialed in on financial policy. And I started to care about hard money. I started to care about the impact of the Fed on all these other areas of the economy where they really had no business meddling. This innovation, Bitcoin, has turned such a generational spotlight onto the issues that you guys have been thinking about for so long.
It's really creepy, Cathie, when you think that he was born in 1982, was it?
Somewhere around there, maybe.
Yeah, Bob Mundell and I had done all our work well before that. Smithsonian was in 1972, where we went on an unhinged paper currency, and he wasn't even twinkling in his mom's eye by then. It's just creepy. It's just creepy.
No.
And now there's
Grow slower, young man.
Thank you. There's a whole generation of people now whose eyes have been turned to these issues because of this new technology.
So exciting.
Yes, and the crises have gotten bigger and bigger and bigger. The global financial crisis, 08-09,
The Great Depression was pretty big, though.
Oh yes, no, I'm talking about post-World War II.
Yeah.
You're right. You're absolutely right on that. Okay, so Solana, I think a lot of our viewers are going to be very interested in, Solana. Why Solana? You have had a storied career. You were at, as I mentioned, Kraken, and that's a diversified exposure. You're exposed to many crypto assets, and here you're focused on one. And would love to know. First of all, maybe you can put it in perspective for people who don't know a lot about it, and give us a sense of why you have chosen to focus on one, and really at an important part of your career, given all of the experience you have.
Yeah, that's a really good observation. Actually, one of the reasons why I chose to go work at Kraken, and before that, I was the president of blockchain.com. Another one of these coin agnostic efforts. I was always coin agnostic. I've never been religious about a particular coin or a particular protocol. It always seemed bizarre to me, like somebody would develop a religious conviction in TCP/IP or in HTTP or whatever. Like they're just protocols. They're means of achieving a certain goal. I still feel that way. I like Solana. I think Solana is a winner. I think Solana has fantastic qualities that makes me want to invest in it, but I'm not religious about it. I don't boost Solana at the expense of Bitcoin, for example. But I do think it's a fantastic investment, and I'll just kind of zoom out and talk about what Solana is and why. Bitcoin is the hardest money known to man. It is really good at being a store of value. And when that value has to change hands, when that store of value has to change hands, you can do that without an intermediary and without somebody who can stand in the middle and stop your transaction. That was really important to me for philosophical reasons. There have been lots of other currencies since then and lots of other protocols since then. But the one that I think has really taken up the mantle of those principles is Solana. And it's done so while expanding the ability of Bitcoin to do all kinds of really interesting things beyond just being a store of value and beyond just being a permissionless area for innovation. On Solana, you can do things that you can't do on Bitcoin, like smart contracts or decentralized finance, DeFi, right? And so for the long term, I think that that is how blockchains will express themselves in a world of high-performance computing and in a world of AI. Those things are all going to happen on Solana. We're going to see when AIs start transacting, I think they're going to use Sol to transact the native currency of Solana. And it's all going to happen at the base layer of Sol, meaning the same layer that everybody sends transactions around on when they buy a cup of coffee or they buy a tokenized stock. All of that happens on the base layer of Solana, just like when you send one Bitcoin to another person, it happens on the base layer of Bitcoin. It's a growth-oriented asset. It's got all of the capabilities of the things that came before it, like Ethereum, but it's still early in its development. It's highly volatile. The price, I should say, is highly volatile. It's still in a price discovery mode, which means a fantastic environment for long-term investing and for short-term investing. Plus, it's natively yield generating, which is not something that Bitcoin has. If you have a Bitcoin, how do you make money from having Bitcoin? Well, you really can't. You could lend it out and take some counterparty risk. But at Solana, you can stake it. It's a proof of stake network as opposed to a proof of work network like Bitcoin is. That native yield generation opens up a lot of opportunities like what we're doing at Solmate for generating yield from the base layer asset Sol. So I could talk about Solana for a long time, but I'll stop there. And I think it's a fantastic place to focus your energy right now. I think it's the best place in crypto. It's not the only place, but it's a really good place to focus your energy, and that's where I'm investing.
Yeah, and so many people know more about Ethereum just because it came along in 2017, so earlier than Solana, and because financial institutions seem to be choosing it as their go-to in terms of decentralized financial services. They don't want to be left out of this movement that is really going to take out a lot of middlemen and speed up ecosystems, lowering the cost at the same time. So maybe you can place Solana in that context and give us a sense of how you will attract some of these financial institutions, or maybe you don't want to. Maybe you want to have just more of a crypto native DeFi experience.
Yeah, it's a good question. As I said, I'm not religious about Solana. When I saw Ethereum come to be, I was actually there. I remember Vitalik, curled up in the corner of Bitcoin conferences, sketching out what Ethereum would look like. I was really excited by it. But what we found over the years has been that Ethereum and Solana are optimized for different things, which is part of why I'm not religious about one or the other. Yes, Wall Street has been inundated by messaging from the Ethereum community for many years, and they haven't had that same messaging from the Solana community. But the reality is that they're good for different applications. Ethereum is, look, I may get crucified by the community for saying this, but Ethereum not only is more decentralized than Solana, but I think it will probably be more decentralized than Solana for a very long time. It means it's really good at being a harder protocol, meaning it's hardened, I should say, against attack. It's harder to shut down. But you know what? That's not always that important. You're not always trying to optimize for something that's going to survive a nuclear holocaust, right? Sometimes you just want your network to run quickly and performantly. And unfortunately, Ethereum is slow. It's so slow at the base layer that in order to go faster, meaning in order to process more transactions per second, it has to use a second layer of transactions, of more centralized computers, validating those transactions more quickly. I should know at Kraken, I helped bring one to market called Ink. And what those are trade-offs. It represents a trade-off. Instead of processing all those transactions at the base layer, you send those transactions to less decentralized intermediaries to process. Okay, well, that is one way of achieving it, but Solana does it a different way. Solana sacrifices decentralization in a lot of ways. I think you have to come to peace with that. I'm okay with that. The trade-off that Solana makes is putting those validators that are validating those transactions in data centers and essentially requiring that these validators are in high-speed data centers with a lot of throughput, a lot of processing power, a lot of RAM, a lot of power redundancy, all the rest. And as a result, two things happen. One, Solana can process a lot more transactions per second, orders of magnitude more than Ethereum. But there's a trade-off. Decentralization. You have to run these things in data centers, these validators in data centers. We, via a partnership with RockGoAX, do run a Solana validator in a data center. There's only so many data centers out there in the world. There are lots of laptops that you can run an Ethereum node on. There's only so many data centers. So that means not only is it less decentralized today, it'll be more decentralized in the future. But which of those do you want? Well, it depends on your application. For high-performance computing, high-throughput applications, if you want to rebuild Wall Street on a blockchain, actually, I think you're going to do it on Solana, not Ethereum. So there's a lot of messaging coming out of the Ethereum community about how Wall Street loves Ethereum. I don't think that's a long-term application. I think that's happening on Solana.
We had a conversation with Anatoly a couple of weeks ago, maybe even last week. And I could tell you, he is so sure of what you are saying. And the way he was talking about, trading and really transforming the trading experience. There's no doubt in his mind that that's what Solana will do and that Ethereum cannot do. And I think all of us are just trying to find our way into this new financial world, transformed financial world. The institutions are choosing Ethereum because of the decentralization and the hardened kind of infrastructure, as you say, when they're setting up. But it seems as though anyone thinking about activating a service involving trading would have to consider what you just said.
Yeah, I think so too. I think that in order to get that kind of speed, the kind of speed that rebuilding Wall Street would need, in order to get that on Ethereum, you have to sacrifice the things that would otherwise make Ethereum valuable. You have to sacrifice the decentralization to get the speed by using what's called L2s, layer 2s, these more centralized computing nodes to get meaningful speed on Ethereum. Why go through all that? Why would you not just do that all at the base layer on Solana? I think that's the future. I think that's where Wall Street is headed, and that's why Solmate is focusing on Solana. We actually do want to rebuild Wall Street. We want to make the piping for a brand new Wall Street. That infrastructure is what we want to build. We're building on Solana.
Now I'd like to turn once again to Art. So we were evaluating the various Solana DATs, digital asset treasuries, that were evolving, looking at the players because, we have a point of view, remains to be seen if it's true, that this is just like every DAT, a winner-take-most opportunity. And so we were evaluating each of them. And our first conversation with you, Marco, you said, I want you to know that Dr. Arthur Laffer has just agreed to be a member of our board. And what I didn't know was you had already been a member of the board, Brera, into which Solmate was folding. And it was because I was so caught off. We talked about the various ones because I think Art was offered a chance or an opportunity to be on many of those boards or a number of those boards. So I said, I'll do some homework for you. And lo and behold, when I talked to you, it's like, So I think one of the reasons is because you were already a member of the company. But another of the reasons, as I learned and as I began to understand from Solmate, is there is a Middle Eastern link here. Is that right?
Well, that is right. And also it was because the other ones that were talking to me about being on their boards at the same time, by the way, I think it was 4 or 5 of them that just there. I think it was just purely and simply not to be objects of elder abuse. Frankly, they just didn't want to say, "Oh God." No, it's if you do look at this, by the way, Solmate does. I mean, it's exactly as you say. It has so many characteristics that are really neat. Yeah. Beginning in I was on the board of Brera, and that is the company that became the PIPES recipient and then turned into Solmate. And that was true of one of the other ones as well. But 2 others were not that. I mean, and it's just that this is a new world, and it does. I mean, it's very similar to the type of stuff we were doing in the 60s and 70s. I don't know if you remember when the dollar was having all those problems with Kennedy. Kennedy is to Marco like sort of George Washington is to me.
Well, even I was a young child.
I know that.
So,
I know. Yeah, don't push it. But it's just really exciting to be part of that, and I hope that I can add a little value on historical perspective and experience in going through those.
And one of the things that Art told me is the reason he was very interested is not only was he a director, that maybe that's neither here nor there, but as he was interviewing the different management teams, he had the opportunity to, ask you your position on many of the topics we've just discussed. But he was very impressed that you came from the legal world, right? And, for a lot of people, the legal world is, this is not a place where you think of people taking huge risks, right? So I think you were very...
Well, that's true. And your background, Marco, was very impressive. Kraken, not only Kraken, but, you've been into the legal stuff there with Pantera, I think it was as well, which is good. And who knows what the administration's going to be like after Donald Trump, which has been very, very supportive of what we do. I mean, he really is a great president, and especially with regard to innovation and monetary policy and all that. I mean, what he wants to do with the Fed is absolutely spectacular. And, there's been a huge drift there in operations at the Fed. I mean, really, what is it? Regulatory drift and in the sense of taking over more and more. And this takes us back to the basics. Mm-hmm. And who knows what the next administration is going to be like. And Solmate, I think, can survive a fairly hostile Fed. I mean, imagine Janet Yellen today being head of the Fed. But it is scary. And the head of the SEC, who was that under?
Gensler.
Oh, my God.
Oh, my.
I mean, it's terrifying.
Thank you, by the way, for the kind words. You can't just turn off the legal brain. That's for sure.
We're trying to turn some of them off, by the way, a lot of them, but this one we don't want to turn off.
But you're absolutely right. I mean, so back at Kraken, I testified before Congress. It was a joint hearing between the House Agricultural Committee and the House Financial Services Committee, and I testified, among other things, that there's regulatory gaps. We need new rules, and under any new framework, under any new rules, the SEC would probably have to give up a little bit of jurisdiction and share it with the CFTC. And I'll be damned if 24 hours later, to the hour, I did not get a call from the SEC saying, you're the chief legal officer at Kraken, aren't you? Yeah, we're going to sue you.
Whoa.
Yeah, right hand to God. That's what happened.
You did get that.
We did, and we were embroiled in a lawsuit, a clearly retaliatory lawsuit, for 2 years as a result. And thankfully, we had
lawfare. Huh? No, that's just. I'm just joking.
Yeah, that's one of the characteristics of the last administration, and why I really do believe we can only build what we're building here today under this new approach. Thankfully, we had built a real policy team, which is in the U.S. lobbyists, in Europe, that's a dirty word, you would say, political consultants, and that's ultimately how we beat the SEC was with politics. We won on Capitol Hill.
And yet that's one of the things also that you can do is, going into imagining another administration, building a company based on profits.
Yes.
That's really important. And that's what you're doing as well.
That's right.
Yeah. And before we go there, I'd love to pivot to the Middle East.
Oh, yeah.
It's fascinating to me that, yes, the last regulatory regime kind of pushed a lot of crypto into the Middle East. So they had a running start in many ways. Now, what's fascinating to me is they have chosen Solana over Ethereum. Maybe you can talk us through that. How did that come about? Why is Solana their chosen blockchain, at least seemingly so?
Yeah, so it comes down to a couple things. One is just strategic focus of the relative foundations, and the other one is probably timing. The timing one is kind of easy to understand. When Ethereum launched, it immediately got Wall Street's attention, and the folks who were involved in Ethereum really had the opportunity to focus on the biggest market, which even to this day is New York, right? It's Wall Street, it's the West. And that was not the case when Solana launched. When Solana launched, it was Laffer going on here in the US. The Wall Street was already inundated, and there was a real opportunity to grow anew, to build anew, somewhere new. And the UAE was available for that. They were among the groups of people pushed offshore. But it's not just a historical issue. It's also a present-day strategic focus on the UAE. The Solana Foundation views the UAE, I won't put words in their mouth, but they've said it publicly. They view it as a strategically important region. The president of the Solana Foundation has just moved.
Yeah,
She
moved her whole family.
Whole family out
Very
there.
young family, yeah.
Right. It made a commitment to the region. And in a world and a time when so many people treat the UAE like an ATM machine, right, the Solana Foundation made a real commitment to that place.
Which means something to
But
that.
also, you want to make sure you mention it's the Middle East, not just one country, UAE. It's also, you've got Israelis involved. It's a small Abraham Accord, if you will. I mean, it really is. It really is that.
The board of Solmate, right? We do. We have Arabs and Israelis on the board in almost equal number.
How cool is that?
It is. It actually is really cool. It is.
You've got
a
a
cool
Christian on there too,
cultural
by the way. I just thought I'd mention that too.
That's right. It's been a fantastic experience to the point where the Solana Foundation this year just held its conference in Abu Dhabi. So the Solana Foundation held the Breakpoint conference there this week, and it was on the tail end of the larger, well, maybe not larger at this point. Gosh, they may be about the same size, but the famous Abu Dhabi Finance Week was held just last week, and we were there in country. We were partners of Abu Dhabi Finance Week. Lily was there. Lots of other Solana people were there, and you could see them coming out in force, focusing on the region as a place to grow, not just a place to go and collect a check from.
Tell them also about the newest acquisition.
Yeah, that's right. So we've just announced a term sheet for a merger with a company called RockawayX. RockawayX is led by Victor Fisher, their CEO, who I'm a big fanboy of. If you go on our
fan of would be better, fanboy,
fan man.
Oh God!
You can look on our Twitter. When we announced the deal, we did a little buddy video of the two of us explaining the deal rationale. I highly recommend you check it out so you can blackmail us later when we're older and wiser. But we decided to merge these companies, and they are based in the UAE too.
It is interesting, very interesting. And the UAE, the Middle East, it does seem they're not going the Ethereum route. They're going Solana. Do I have that right?
Yeah, I think so. It's a growing space. It's a growing jurisdiction. It's a place that wants to compete with Wall Street. I think those who are paying close attention in the UAE see similar factors in Solana that I see and that other crypto natives have seen for a very long time. Plus their regulation and their government focus has been deliberate, carefully tailored to the risks that are actually there. They make a very clear distinction, the regulators there make a very clear distinction, for example, between staking in a non-custodial fashion and custodial staking, right? Very different kinds of risks, and therefore regulated differently. And it's a technology-neutral, risk-based approach to regulation that was intuitive to regulators in the UAE, and it took regime change in the US.
And also, you look at New York today under the current government status there. I mean, you face a lot of problems in New York City. Believe me, Cathie, you moved down here to Tampa because of New York
Tampa,
City's
St. Pete,
making
yeah.
it very difficult to do business there. And, I remember when everyone moved out of Detroit. I mean, Romney was to put on the income tax in Michigan. I mean, Detroit went from 1.9 million people down to 600,000 people because of that. And New York is facing the same thing, the outmigration of businesses, people, et cetera there. And the UAE makes a lot of sense to get around the regulation, to get around the tax structure, all of that. I mean, it's really hard to innovate in New York today.
What's interesting is in 2021, Sheikh Taknoon of Abu Dhabi, very focused on how the sovereign wealth funds are investing and where, very focused on AI. I went and gave a presentation, and I could tell that he was eager to harness all kinds of innovation. We talked about autonomous mobility of all types, and they are way ahead of us in drones and eVTOLs and so forth. In fact, many of our companies are commercializing first in the Middle East because our regulators have been dragging their feet. He was very focused or interested, I would say, at the time in everything we do, including crypto. It's almost like he took our big ideas, he and his team took our big ideas and ran with them from a regulatory point of view. I think that's perhaps why I'm paying more attention to its decision to focus on Solana. It's like, okay, they've been looking at this for a while and they've made a choice. Okay, should we move over to DATs now, digital asset treasuries? Now, I think that's becoming a dirty acronym, the way they've been acting. They come out and then they boom, and then we've seen recently, most of them have come down to earth and many have slipped below net asset value. I know you have a point of view on MNAV, so maybe take us there. What you yes?
Yeah, absolutely. So Solmate actually started as a digital asset treasury, a DAT. Solmate started as a company whose sole job it was to accumulate SOL and have very little operational presence, at least from a treasury perspective. We raised $300 million in a PIPE. ARK was one of our lead investors, and we're super proud to have you, and still one of our largest investors. We saw over time, particularly as we started to apply the business model that we had drawn up, that it was only half the story. The treasury story was only half the story. So we actually didn't publish our net asset value, and we still haven't published our net asset value. Instead, we focused on what we thought was and still is an underserved area of treasuries, which is, well, what you do with all those coins that you buy. What do you do with them? We wanted to build infrastructure with it. We think that having the coins, particularly on proof of stake networks, having the coins and then trying to generate a yield from the coins was good, and that's what most treasury companies do. We think we can do better. And so we had a partnership with one of our anchor investors, RockawayX, which that partnership entailed building a bare metal validator, an actual server, so you can look at it. If you go to our website today, solmate.com, there's a looping video right in the beginning. It's not stock footage. It's an actual camera set up on our actual validator that is in the UAE right now validating transactions. We wanted to make it clear that this was not stock footage, so we put a little disclaimer that says, this is not stock footage, this is our actual validator. RockawayX and Solmate built that in a partnership. I put on the little blue booties and we toured data centers to build this thing. What that allows us to do, building bare metal, means that we can earn a yield from the SOL, but on top of that, we can sell other services that we think will actually generate real cash, real revenue, and EBITDA. And that's what we want to focus on.
What are those services?
Yeah. So what we want to do is sell co-location services. We want to be able to sell RPC, remote procedure call services, and other transaction landing services. And the only way to do that is by actually building bare metal, building servers. They call it bare metal because it's not on the cloud somewhere. It doesn't exist in like Microsoft data center. It exists in a data center that
means you can
have
control
a
its
lease to.
properties.
Yeah.
You don't have
absolutely.
another firm that's overseeing it and regulating you effectively by being in the cloud.
Yeah, that's right. We don't have a commercial regulator, right?
So it
Absolutely.
is your own data center.
Well, the idea is that right now we're using another person's data center, right? But we have a cage inside that data center, or what we can do, I should say, is open up a cage next to our validator and co-locate other servers next to that validator.
Right.
And co-location is, I shouldn't say an age-old business, but in technology terms, it's an age-old business, right?
That means last week, Cathie.
And it allows us to do more than just send our SOL off to an asset manager, our SOL off to an asset manager and tell them to try to generate yield for us. It allows us to generate yield itself. We can even participate in network governance and do all kinds of cool things on top of that.
So you've got a vertical integration strategy, which is unlike many other DATs.
Yeah, it's certainly more than a pure play treasury company has. And you can contrast what we want to do with what MicroStrategy does, for example, which is really just a capital markets perpetual motion machine. Maybe that's pejorative, a flywheel, a capital markets flywheel. What they do is whenever their stock price is higher than their net asset value, they sell stock to bring that down, and they go and they buy Bitcoin with it. We don't want to just play that capital markets game. We want to have an actual operating business that will generate cash flow, something that will be there in bull markets and in bear markets. And that differentiates us to the fact that I don't think we're going to be talking about ourselves as a treasury company for very long. In fact, I don't think we'll ever publish our MNAV, our multiple to net asset value, except when we're required to for our financial disclosures. What we're going to publish is earnings. That's what I want to focus on.
And you're going to base the appreciation of the asset based upon the earnings growth into the future. I mean, that's just like normal businesses.
Absolutely. We want Wall Street to value us like any other operating business. We want Wall Street to see us for the earnings machine that we really are.
I mean, actually a PE. That's what you're really looking at. Yeah. Oh my God, what an innovation.
Well, before we started in the prep for this, you described a little bit of your own flywheel with Rockaway. Do you want to talk a little bit about that and why it makes so much sense?
I think there's a moral hazard. There's a real moral hazard among treasury companies today, particularly now that many of their valuations have dropped below their net asset value. There's a real pressure to go out and find revenue somewhere so that they can take that revenue and buy their underlying coin with it. I think that's a moral hazard because what it does is pressure these companies to buy any business they can that will generate revenue for them. They're going to
Sounds like a death spiral to me, to be honest with you.
I think they're going to be tempted to go out there and buy laundromats and liquor stores anything that will generate
liquor
revenue.
stores do not go well in the Middle East.
No.
I just thought I'd mention that.
No, they don't. It's a fair point. I didn't want to do that. And so last month, about a month and a half ago, actually, I announced what would be an aggressive acquisition strategy for us. But I made very clear in that announcement that I didn't want to go out and just acquire revenue. I wanted to buy something that would be synergistic with our business. And I wanted to buy something where our treasury would improve their business and their business would improve our treasury. So that at the end of the day, when we generated $1 in revenue, there wasn't this Sophie's choice of, gosh, how many cents of this dollar do I go out and spend buying a new laundry machine, right, or new inventory for the liquor store versus buying the underlying coin? I didn't want to have that choice. I wanted every decision we make, particularly spending decisions, to be driven by the accumulation of the underlying coin, SOL in our case.
And making it profitable.
100%.
And you're keeping your blinders on where you're focusing on the business, not on gimmicks, not on tricks, not on other stuff like that. By the way, the buyback is a gimmick or a trick. I mean, that if you're doing what the others are doing.
Yeah,
trying to find assets to buy their coin, which is undervalued. That's just exactly what companies do who are running out of ideas.
So now that then when we sat down and went to articulate the strategy and lay it out, Victor, who's Victor Fisher, the CEO of Rockaway X, we sat down and we realized, gosh, our businesses are the same business. The asset management, Rockaway X does three things. They build infrastructure. We're building infrastructure. They provide liquidity. Well, gosh, we have a big treasury. That's got to drive liquidity. And they do asset management. Oh, well, we need asset management for our treasury. It was such a no-brainer that our treasury would improve the Rockaway X business and the Rockaway X business would improve our treasury, that the synergy of value of that was undeniable for us.
Is he from the Middle East, or was he attracted to the area because of this regulatory arbitrage?
He, like me, we were both attracted to the Middle East. Victor's from Prague, and the business that he built, Rockaway X, I wish he was here. He's great at articulating this point too, is based primarily in Prague. And then he went just recently to the UAE, just saw the opportunity there, saw the value of it, the talent, the focused government, the infrastructure that was already built there, the fiber optic lines, right, running directly from Frankfurt to the UAE. He saw the same value that I did.
And just in terms of final point on the Middle East, its central location is also key to your strategy. So maybe you can talk about that.
Yeah, that's right. Most people think, the Middle East there's a lot of money there. Well, that's not wrong.
No.
Right? They call Abu Dhabi the capital of capital. I think that's actually, they have a trademark registration for that term, which is very smart of them. So I won't use it. I won't use it without permission any further. But there's access to capital. And we do believe that proximity to capital is important for businesses that want to build a big treasury, right? Because what these treasuries do is they take in fiat currency and generate coins faster than you could do it on your own, right? So proximity to capital is important. But what most people overlook is that the UAE's geographic positioning, where it stands on the map, having nothing to do with the money or the oil or the sovereign wealth or any of that, it's the geographic positioning that's also highly valuable for high-performance blockchains. Zoom out, look at the globe. On one end, you've got the Eastern Seaboard, New York, for example, right, where there's so much financial activity going on. I should say on the other end, you've got central limit order books for crypto exchanges in Tokyo. And somewhere in the middle, on the top, right up here in the north, you have Frankfurt that has 30% of the Solana network staked on its servers. That is an arc, right? At best, it's a circle, and there's nothing in the middle, or at least there wasn't.
Did you say?
An arc.
So to speak.
And there's nothing in the middle, right? Until Solmate came along. There was no transaction validating happening in the UAE until Solmate built the very first performant bare metal validator in the UAE. We validated what we believe to be the first transaction there. We placed a quote. It's famous in the region. It's actually on the Dubai Museum of the Future. We embedded that in the very first block ever mined in the UAE, and now we're validating transactions there. So it forms this geographic hub that matters when latency matters.
Latency, critical. And that's what we spent a lot of time with Anatoly talking about. Yeah, how important, how strategic this positioning is.
Yeah, Solana rewards those who can deliver low latency.
Yes.
And part of our roadmap for the future puts latency at the core of everything that we do. Mm-hmm. So the future for Solmate is not just transaction validation, because on Solana, those who validate transactions actually get to determine the order in which transactions appear on the blockchain. This is really important in traditional financial services for things like payment for order flow and high-frequency trading. These are highly valuable areas.
Think Citadel.
Bingo.
Yeah.
Bingo. With Solmate and our bare metal that we're building in the UAE, we can perform those very same services on our own behalf or on behalf of third parties on the Solana blockchain right there from the UAE, and because of its strategic positioning, have lower latency than other competitors. We view that as a strategic benefit, particularly on Solana, because...
Explain low latency.
Yeah, latency being the time it takes for one packet of information to get from one point on a network to the other. It's critical for high-frequency trading, right? The high-frequency traders want to be close to an exchange because trading transactions can be valuable if they get faster for them, if they get more information about those transactions. But on Solana, it's not just trading transaction. It's not just financial transactions, right? It's all transactions. They all occur on the same database at the base layer. So I'll paint one picture for you, one potential transaction. Somebody goes to a Starbucks and buys a cup of coffee. That transaction appears on the Solana blockchain because they bought it with a stablecoin on the Solana blockchain. At the same time, a high-frequency trader might want to buy a tiny fraction of a share of tokenized Starbucks stock. What our services could do in the future is position the trading transaction just before the purchase of Starbucks stock every 450 milliseconds. Then you zoom out, a whole financial quarter of those would give you a tremendous advantage, not only in the transaction order.
Go through that again, because that's really, really important, Marco. I mean, I never thought of this before you talked about it with me earlier, and it's just amazing what you're describing.
You have to imagine high-frequency trading now only occurs on exchanges. But when all transactions are done on the same database, when they're all done on the same network, you're not just high-frequency trading, you're high-frequency transacting. And so funds that want to run complex arbitrage strategies, that want to respond to minute moves in the market, can use services like ours in the future to generate real meaningful revenue in the same way that high-frequency traders do it today. I think it's hugely powerful. It's the difference between high-frequency trading today and what I'm proposing for Solana networks and high-performance blockchains in general is the same difference between email and letter writing. Email is not just a faster letter, right? It changed the way that people thought about writing emails. I think high-performance blockchains can change the way people think about trading.
It's like the old floor brokers. If you remember, they have the list of the buyers and sellers at different prices, and they do the meshing there. And that's exactly what you're talking about here, only on hyperventilated speed. I mean, it's really true. No, but it's amazing what you can do on that. And there are probably all sorts of other applications as well in this.
Well, what about, and we're trying to think about this, and this is probably the topic we'll wrap on because it's a very exciting topic. A lot of people are talking about it. It seems like Solana might be ripe for it, but prediction markets around everything that's going on. Have you thought about that, or is this you're still
by prediction markets? You mean you mean crowdsourcing, and that type of thing?
That effectively, so Polymarket and Kalshi are the two big ones right now. But it would seem, and as you were saying it, I was like, oh man, this could be very interesting because you're getting millions of people with all kinds of inputs around the different places around the world who will take the bet on this event happening or not happening up by a penny or something, but high frequency would be very important here. Am I right?
Absolutely.
And the ability to process throughput is going to be critical.
Absolutely. You've already got Polymarket doing a lot of this on chain. With all of the throughput that Solana can offer, we'll see Polymarket's role expand, but I think we'll also see on-chain Polymarkets, on-chain prediction markets happen. Right now, Polymarket, I believe, uses a central limit order book.
Yes.
Solana has the throughput and has the growth, has the footprint to be able to do to free that from the centralized database that Polymarket uses and to actually do it on-chain using a smart contract. Companies like ours would build the infrastructure for that. Then on-chain Polymarket, the next evolution of that is going to want to co-locate with a validator that is validating those transactions where milliseconds matter. I would say if they can co-locate in the very same cage as ours, microseconds. That's how a new economy is going to get built.
Yeah.
And that's why we think it's easier to just start from scratch and build that in Abu Dhabi, where...
Can you describe how rapidly you can do transactions?
Yeah, you're talking... Today, it's tens of thousands of transactions per second. We're seeing in the lab over 100,000 transactions per second, potentially scaling to millions. So back to our original point, there's a trade-off. This isn't free. Mm-hmm. You have to do this in a high-speed data center. You need a high-speed fiber optic connection between that data center and whatever other transaction participant you're transacting with. There's no free lunch. But that's why we believe that it makes sense to build on bare metal, because we can do that in a data center, regardless of who the data center is owned by. We can co-locate the next poly market.
Yes, and just to clarify, poly market is not on Solana right now.
That's right. So they use I believe they use a central order book, but they do have a back end for resolving these markets that is crowdsourced and uses the wisdom of the crowd that is on chain.
So it is kind of, there's another step forward that Solana will enable.
Yeah, that's absolutely right.
And not anymore, but you've also got so many other applications of Solana. If I'm right on that, I mean, you can do contracts, et cetera. You described one to me. If you need to pay $1 a month every third month, and so that can all be done on Solana.
Yeah, that's right.
Smart contracts.
That's right. Smart contracts.
And smart contracts can be done that can't be done on other companies' bases.
Yeah. So Bitcoin, for example, Bitcoin is what got me into all this, right? It's what got a lot of people into crypto. It's really good at being a store of value, but you can't do smart contracts on Bitcoin.
Well, that takes us back to the beginning of the conversation. We're back to 2014 when we did that.
Back to the beginning. This is a perfect way to wrap up. This has been wonderful. I've learned a lot. I hope our viewers have learned a lot. I want to thank you, Dr. Arthur Laffer, for joining us here in St. Petersburg, as well as you.
Why are we here?
What do you mean, why are we here?
Instead of New York, where you were.
Oh, yes, we were having this argument about
discussion.
Debate. Yeah.
Not even debate.
Okay.
It was, we agree.
Okay.
Golly gee.
Anyway.
I came here to hear the ARK investment thesis for Solmate. That's why I came down here. I flew in from Abu Dhabi to come here as a 16-hour flight because Cathie promised me she was going to tell me in this podcast and tell the world why Solmate.
Do you see what happened? You helped me tell that story. I can only tell you, and you can see as we disclose our holdings at the end of every day and our trading every day, you can see that our confidence has increased actually, as we've learned more and more, especially about what's going on in the Middle East. So, as you said, and as our trading shows, we have increased our position since we took our first position, and that's because of many of the reasons you have described today. That you have devoted this very important part of your career to one chain, Solana, and are spending, as I understand, 1 week a month in, I think, Dubai or Abu Dhabi, the area generally. To be honest, having spoken to Anatoly, who's from a tech point of view leading the charge for Solana, and Lily, who's the president of the foundation, who's committed herself to the Middle East and to Solana so completely, we needed to get exposure to this important movement, this important blockchain. And we needed to figure out the best way from our point of view to do that. So we chose Solmate. Of course, Art being on the board was helpful because he also did his due diligence. And you being at the helm, very important to both of us. And, ecosystems like this, you need to meet the people who are making it happen. And, we've met many other people from other DATs as well, and they're very accomplished, very accomplished. We saw something coming together here that we did not see elsewhere.
Thank you so much.
Yes. Well,
and thank you for being an investor.
Yes. Well, I'm standing on the shoulders of our research directors and analysts.
But she hired all of them, just so you know. She's standing on the shoulders, but they're standing on her shoulders as well.
It's a team. We're a team.
Yep.
Well, thank you very much. And thank you for joining us. Brett will be back for the next FYI.
ARK believes that the information presented is accurate and was obtained from sources that ARK believes to be reliable. However, ARK does not guarantee the accuracy or completeness of any information, and such information may be subject to change without notice from ARK. Historical results are not indications of future results. Certain of the statements contained in this podcast may be statements of future expectations and other forward-looking statements that are based on ARK's current views and assumptions and involve known and unknown risks and uncertainties that could cause actual results, performance, or events to differ materially from those expressed or implied in such statements.